Most people are completely blind to what's happening in the market right now. We just saw Nvidia crater after earnings. AI stocks are all over the place. The market has no idea what to do next. And if you're sitting on the sidelines waiting for the perfect entry, you're already losing. Because here's the truth. The money is made before the crowd wakes up. If you wait until CNBC tells you it's a buy, you're too late. So today, I'm breaking down 6 stocks that I'm watching right now and exactly how I'm playing them. One of them just got crushed and is down 28% in 2 weeks, but I'm still buying. One is expanding globally and could 2x, and one is the easiest way to make money in AI without trying to time the market. By the end of this video, you'll know what I'm holding, what I'm watching, and how I'm positioning for what's coming next. No theory, no fluff, just real plays and real strategy. Let's get into it. 2 weeks ago, I told you Palantir was due for a pullback. What happened? It got hammered, down 28%. But here's the thing, nothing changed. The market is panicking over short-term noise, while Palantir is still positioned to dominate AI. Most people don't understand what Palantir actually does. They think it's some government contractor. Wrong. Palantir is AI's real-world application. They don't build AI. They make AI usable. They turn raw data into decisions that make money. And once a company starts using Palantir, they never leave. Let's look at the numbers. Enterprise customer growth up 33% year over year. Commercial revenue up 70% in some sectors. Locked in government contracts that print cash. The stock is sitting at $85 and support is forming around $75. Some people see a crash. I see an opportunity. Here's how I'm playing this. Number 1, I'm holding long term because fundamentals didn't change. Number 2, I'm getting assigned shares above the current price, but that doesn't matter because long term, this stock is heading higher. And number 3, I'm selling options to collect cash while the market panics. Most people run from red days. The people who make real money, they buy when others hesitate. Tesla is a stock that a lot of people want to love, but should you? Tesla should be dominating. They have the brand, they have the tech, they had a massive first mover advantage. So why is the stock getting crushed? Because Tesla has real problems and people don't want to admit it. Tesla's EV demand is slowing, profit margins are shrinking, competition is heating up, and Elon Musk is focused on everything except Tesla. Look at the chart on the screen. Tesla is down over 40% from recent highs. This is not some little pullback. This is a major trend shift. And when you dig deeper, the warning signs are everywhere. And if you want to grab my indicators, you can get a free trial on TradingView. Tesla's revenue growth forecast, just 2.6%. Profit margins collapsing. Stock momentum, clearly bearish. Now, let's talk about why Tesla is in trouble. Elon Musk isn't just running Tesla. He's running SpaceX, Twitter, Neuralink, the Boring Company, AI projects, and now Doge, the Department of Government Efficiency. That's right, instead of fixing Tesla's shrinking market share, he's taking on government bureaucracy. And while that might be a noble mission, it's not helping Tesla sell more cars. Meanwhile, Tesla fanboys keep saying the new models will change everything, and maybe they will. But here's the reality. New models take time to scale. Even if they sell well, it'll take quarters, maybe years to hit earnings. By then, competitors will have already stolen more market share. And here's the part no one wants to talk about. Elon Musk is actively damaging Tesla's brand. In Europe, he made a salute gesture that's already turning customers away. Whether it was intentional or not, doesn't matter. The damage is done. Then there's politics. Musk and Donald Trump are working together, and regardless of where you stand politically, history shows that CEOs getting involved in politics is risky for business. And the bigger issue, 2 massive egos never play nice forever. Right now, Musk and Trump are aligned, but if that relationship explodes, Tesla could get caught in the crossfire. And when Tesla's stock depends on sentiment, drama is a real risk. So here's how I'm playing it. I sold most of my Tesla shares back in January. No regrets. I'm not buying back in until the fundamentals improve. If I see a real turnaround, I'll reconsider. Until then, I'm watching from the sidelines. And don't get me wrong, I want Tesla to win, but hope doesn't make you money, profits do. Until they prove they can stop bleeding market share, I'm staying out. Next up, let's talk about Nvidia because they just obliterated earnings. $39.3 billion in Q4 revenue, up 78% year over year. Data center revenue up 93%. Full year revenue up 114%. So why did the stock drop over 8% the day after earnings? Because expectations were already too high. Nvidia was a $1 trillion stock when AI hype started. Now it's a $3 trillion stock. The easy money is gone. Last year, revenue exploded 126%, but over the next 3 years, projected 28% growth. That's still strong, but Wall Street already priced in perfection. This isn't about whether Nvidia is a great company, it's about whether the stock can keep climbing. Two massive risks no one is talking about. Trump's 25% tariffs could crush their margins, and Nvidia doesn't make its own chips. They rely on TSMC in Taiwan. If tariffs hit, imported chips get taxed. That leaves two bad choices. Number one, they can raise prices, which will hurt the demand, or number two, they can eat the cost, which will shrink their margins. And the competition is catching up. Google, Amazon, and Microsoft are all building their own AI chips. AMD's MI300 chips are winning government contracts. Right now, Nvidia has pricing power, but that won't last forever. So here's how I'm playing it. I still own Nvidia long term. It's still the AI leader. I run the wheel strategy to provide weekly income while holding the stock. Short term, yes, Nvidia is volatile, but long term, I still like Nvidia. Next up, Marathon Digital, ticker MARA. Marathon is the high-risk, high-reward stock that pays me weekly. This is the ultimate volatility stock. If Bitcoin runs up, Marathon usually prints money. If Bitcoin drops, Marathon usually gets destroyed. And right now, Marathon is down 47% in the last 3 months and 54% over the past year. Most people see that and panic. I see opportunity. Here's proof from Marathon Digital's recent earnings report. The revenue, $656.4 million, up 69% year over year. Their net income, $541 million, up 100%. And Bitcoin holdings, 44,893 Bitcoins, up 197%. And their hash rate capacity up 115% to 53.2 EH per second. Marathon is one of the strongest Bitcoin miners financially, yet the stock has been crushed. Why? Because Marathon trades on Bitcoin sentiment. It doesn't matter that they're stacking Bitcoin, expanding mining capacity, and cutting costs. When Bitcoin drops, Marathon usually drops harder. But here's what most people don't realize. I've been making money on Marathon for the last year, even while the stock tanked. How? Options. I don't just hold Marathon, I sell options for insane premiums and use the wheel strategy. So here's my plan. I already own Marathon and am very profitable because of the wheel strategy. I'm selling covered calls weekly for cash flow. Marathon Digital is definitely not for the faint of heart, but if you know how to trade options, hedge risk, and capitalize on volatility, this stock can be a cash cow, and I post all of my trades in my Patreon so you can follow and copy if you want. Most people are scared of stocks like Marathon, but I know how to play them and get paid. Now let's talk about Robinhood because they have the potential to double in the next 12 to 24 months. I know a lot of people still think Robinhood is a joke. They call it a meme stock, a pandemic fluke, a trading app for beginners. The numbers say otherwise. Revenue, $1.01 billion, up 115% year over year. Net income, $916 million, up 1,000%, and that's not a typo or mistake. The net deposits, $16.1 billion, 42% growth rate, and their average revenue per user, $164, up 102%. And here's where it gets insane. Transaction-based revenue, $672 million, up 200%. Crypto revenue, $358 million, up 700%. Options trading revenue, $222 million, up 83%, and stock trading revenue, $61 million, up 144%. This isn't just growth, this is dominance. But here's where things get interesting. Robinhood recently pulled back 20% from its highs, and right now, $48 is forming a key support level. This is exactly the kind of dip that creates opportunity. If support holds, we could see a bounce back towards $55 to $60 in the short term. And long term, Robinhood's last earnings report was exceptional. They're about to expand into the UK and Asia, unlocking millions of new investors. If they execute, Robinhood at $48 could still be very cheap. How I'm playing this? I've already sold puts on Robinhood, generating income while I wait for the stock to go higher. I view Robinhood as a strong long-term play based on fundamentals and expansion potential. I'm watching the $48 support level. If it holds, I'm going even bigger. Most people overcomplicate investing. They chase hype stocks, try to time the market, or constantly switch strategies. That's why they lose. The people who win, they own high quality assets and let time do the work. That's exactly why I bought $50,000 of SCHG last month. And SCHG is a growth stock machine that requires zero effort. It owns Apple, Microsoft, Nvidia, Amazon, Meta, Google, all the big names. They've got a very low expense ratio, just 0.04%. Massive long-term compounding with almost no work. And here's why this matters right now. In the last month, SCHG dropped 4.11% and I bought more. Why? Because I'm not trying to time the market. I'm building long-term wealth. This ETF is designed for investors who don't want to gamble. You don't have to guess which company will dominate. AI, EVs, or cloud computing. SCHG already owns all the winners. And here's what most people miss. SCHG has outperformed the S&P 500 and the Triple Q over the last year. So here's how I'm playing this. I already own SCHG and I'm not selling. I'll keep buying more anytime we get a pullback, and I'm holding for the long term because compounding makes you rich. This is the easiest way to build wealth, and yet most people won't do it because they think they need to outsmart the market. You don't. You just need to buy assets that win. At this point, you have two choices. One, you take action. You use what I just showed you. You stop playing the market like an amateur and start making real money. Or two, you do nothing. You keep watching videos, overanalyzing, and missing opportunities. Then in 6 months, you'll look back and realize you could have made thousands, but you hesitated. Here's the proof. I made over $1 million in the stock market in 2024 alone. You've seen my numbers, you've seen my plays. This isn't luck, it's strategy, execution, and having the right information at the right time. If you want to see exactly what I'm buying, when I'm buying it, and how I'm trading options for cash flow every single week, then join my Patreon. Inside, I share my real-time trade alerts, no guessing, just execution, my daily breakdown of the hottest plays in the market, the exact strategies I use to generate consistent profits. You can keep guessing in the market, or you can start playing to win. The choice is yours.